In this video, we are going to look at a simple trade that was rooted in the fractal hybrid divergence idea. Just as a reminder, the fractal hybrid divergence is the combination of a hidden divergence in a higher timeframe with a reversal divergence in a lower timeframe. The higher timeframe is the current timeframe we are analyzing. The lower timeframe would be the next lower timeframe, which in this case is the 5-minute. Since we have the fractal candle concept under our belt, we don't need to change timeframes to see that reversal divergence happening. We can do it all from only one timeframe. The fractal hybrid divergence idea can be a little confusing at first, so we are going to look at a trade that has a simpler context around it. In number 1, we can see a very wide bullish candle that apparently initiated the downward trend we are seeing in this chart. Notice how price explodes down, and then it starts to create more reliable and balanced movements from number 2 to 7. As I said in the beginning, there is nothing especially challenging about this market. Sellers are just creating lower highs and lower lows between number 2 and number 7. However, in number 7 things get pretty interesting because we begin to see a bearish hidden divergence happening. A bearish hidden divergence simply means that the market will continue to go down. We identify this type of divergence by comparing the highs of the relative strength index with the highs of price action. Notice that number 7 is a lower high than number 5. In the relative strength index, number 7 is a higher high than number 5. That's a discrepancy in momentum because if price and market momentum were in alignment, high number 7 should be lower than high number 5 in the relative strength index. That's just a simple hidden divergence marked by the sloped red lines in the chart. The really interesting thing about this trade is that in number 7, a fractal candle appears. Pay close attention to the precise alignment between candle 7's high with the high of the previous candle. Now take a look at the momentum offset between these two little highs in the relative strength index. This is a small reversal divergence happening in a lower timeframe. The fractal candle number 7 also happens to be in the turning point of market vectors 4 through 6, which was the last time sellers appeared in the market to create the movement between 5 and 6, as you can see by the horizontal blue line. The short trade you see in this chart was triggered at the opening of the candle right next to the fractal candle number 7. Since we are dealing with a fractal hybrid divergence with a clean context, our stop loss can easily be placed a few pips above the high of our fractal candle number 7. We also have a lot of headroom to place our target, but we are going to place it in the lower line of the lower orange rectangle. These two orange rectangles are also very simple. The higher rectangle just captures the range of the last movement produced by the sellers, which was the market vector between number 5 and number 6. The lower orange rectangle is equidistant to the higher orange rectangle. This is vaguely based on the Newtonian idea that every action has an equal and opposite reaction. The market vector between 5 and 6 is the action, and the lower line of the lower orange rectangle is our expected reaction for this movement. Our stop loss is roughly 10 pips and our target is about 30 pips, which gives a nice and realistic risk-reward ratio. Let's see how the market turns out. Here we can see that our trade hit the desired target. Notice how the market misses the target and then comes back near to the entry point of our trade. This is a situation in which a trader must remain psychologically strong and keep the trading orders where they are supposed to be. A lot of traders see price missing the target and coming back, so they get desperate and close the trade with a small profit. That seems like a good idea in a first moment, but it's deadly in the long term, as we observed in the other portions of the course. Hopefully you were able to see the simplicity of this trade. Not all trades are tricky and complicated to make. Some of them are quite simple, like this one, which is a relief for less experienced traders.